Thanks, folks. Thanks for joining in on a Tuesday evening. I know it's not the usual time for all of us to join these kind of sessions. It's usually walking time or something of that sort. But still, we wanted to conduct this session to help all of you out in the tax planning. Obviously, I also understand tax is a very complicated subject matter. I think for that we have Aparna on the call. She'll help us figure out what are the various heads around tax and what are the various deductions we can use. Since all of us understand that tax is a pretty boring subject or like it's a very complicated thing, hence we have added a lot of memes around the presentation. So we would expect like the objective is to make tax planning very fun and very easy to understand. So yeah, I would want to start in that way. So essentially would want to cover tax structures, different heads of the tax, and kind of what are the various deductions available for us for salaried employees. We would strictly cover the salary component of it, not any kind of capital gains or income from house rent and all those things, because that's a very large topic. Before we start, wanted to introduce Nova as well. Nova is an employee wellness platform with a core focus around health insurance. We help organizations improve employee wellness, employee well-being through a variety of wellness programs such as daily fitness, mental health counseling, health checkups, etc. Also, Aparna is with us. Aparna is a chartered accountant. She has a vast experience in several financial areas, including like tax audits, financial due diligence, financial planning. Currently Aparna is a director at Kisation Square Consulting. Also, folks, if there's any question during the session, feel free to post it on the chat, and in the end, we'll cover it. We would want to have this session for 25 minutes, and in the end, we'll have a lot of Q&As. So the same session we had on Friday as well. The session got stretched by 20 minutes due to the number of questions. Hence, we have requested Aparna in this case to restrict the number of like the session timing, and we'll focus on the Q&A aspect as well. So over to you, Aparna.
Yeah, hi everyone. Firstly, just want to welcome all of you to this session on tax planning and saving options. Yeah, like Devansh said, moment everyone starts talking about taxation, it's a lot of stress and worry on everyone's face. And I hope there will be some clarity around various tax aspects after this session. Again, many of you in this audience, I'm pretty sure you're doing your own filing and, you have some practical knowledge around it. And I just hope that this just adds on to whatever you know already with regard to taxation. And today, I think we'll focus on various tax saving options and planning, as we are already at the brink of the next financial year. We're almost at the completion of this financial year. So pretty much the time when everyone starts thinking about tax savings and what last minute scrambling around what they should kind of invest in, etc., etc. And then important thing is, again, we need to start all over again and start planning for the next financial year. So a small presentation around this, which I hope will help everybody. Just I hope it's all visible to everyone, right? On the screen.
Yeah, but we can see. I think before we start, I think we had one very simple, very basic question for Aparna also to understand what's the age demographics of this session. So I'm running a poll on the screen. If you can just answer that.
So I think we'll start off, and like what we're going to discuss today basically will be applicability and returns, heads of income, various the tax regimes and the slab rates, available deductions for you, selection of schemes with a few illustrations, not to complicate things, but just to bring in a little more clarity. Common tax saving options that people have and people use. As well as typical mistakes which everyone makes, right? So don't worry, you're not too late. You don't have to think that you don't know anything about taxes. We can always figure it out now. So don't worry about that. So applicability and returns, I think income tax, as we all know, is a very cringed word, and charged on the annual income earned by an individual over a financial year. So as you might be aware, there are certain slabs beyond which you come in the taxable bracket. So if your gross total income is more than 2.5 lakhs a year for individuals, that's typically when you come into the tax slab. And there are various slabs which we will go through later, basis which you will be taxed. Of course, in case of senior citizens and super senior citizens, these limits are much higher. It's around 3 lakhs and 5 lakhs a year. So the important thing I think to remember over here is it's not only these parameters which wherein you are forced to file a return, but yes, I mean depositing a large sum of money in your account. I mean, if there is a large sum of windfall that you've got, you would typically have to file a return. If there's any kind of foreign travel expenditure which you've incurred for more than 2 lakhs, you would have to file a return. Any kind of assets which are held outside India. So bottom line is filing tax returns would be mandatory even if there's no ultimate tax liability which comes with. 5 heads of income. Again here, income from salary, most of you are drawing that. So that's pretty much one important source of income. The second income is income from house property. So typically, if you own a house property and you've let it out and you're getting some rental income, this income gets taxed under this head. If you are in any kind of business or professional venture that you have started, any kind of profits or gains that you're making on that gets taxed here. Income from capital gains, again, in any kind of sale of shares, sale of property or mutual funds, or any kind of transfer which you've made of any asset here will get taxed here. And income from other sources, typically all your interest income, it's like a residuary category, right? Any other income that you're drawing will get taxed. So these are the 5 broad heads under which all your incomes are grouped, and the gross income would be the total of all these incomes from all these heads. I think it's very important here that we should know what is new and what was the new regime and what is the old regime, so that we can take a conscious decision as to what we should follow. So what has happened is we have got a new regime which has been introduced since 2020. Wherein there are different tax slabs as well as certain rules and parameters which we need to remember. So it's not a replacement of the old regime per se, but the option is available with the individual on whether he wants to go with the old regime or the new regime, which is an important decision that all of us need to make. So it's available to all individuals, as you can see, salaried and non-salaried. And in case of old regime, as you are aware, and we've been doing it in the past, all the deductions, exemptions can be claimed. And there are 4 main slabs here. But when we come to opting for the new regime, there is a change there. There are very, very few deductions which can actually be claimed, and very few deductions and exemptions which can be claimed. And instead of 4 slabs, there are 7 slabs which have been introduced here with different rates. So again, here the taxpayer has to kind of decide which kind of option that he wants to go with. These are the tax slabs for your reference. If you can just see, we had 4 main slabs here in the old regime, but now we have 7 slabs. So typically more than a 15 lakhs income falls in the 30% bracket. But if you see, there is a 5, 10, then a 15, 20%. So in the new regime, there are many more slabs. Of course, the beginning slab for senior citizens is different, like we discussed earlier. So what are the deductions that are allowed as per the new regime? So as per the new regime, like I mentioned, very, very few allowances. So conveyance allowance and any kind of travel that, for employment or on transfer that you do will be allowed for work. Transport allowance for specially able people. Investment in any kind of in NPS basically will be allowed. The other two actually deductions are not for salaried guys, so I won't focus so much more on that. I think important thing would be to understand the next slide, which talks about what deductions are not allowed as per the new scheme. So typically your house rent allowance, your lease rent allowance, your conveyance, children's education allowance, your standard deduction, profession tax. So these are things that you normally would have claimed as per the old regime. Your chapter 60 deductions, you will not be allowed these as per the new regime, because the slabs are also more where the rates are slightly lower. So that's a option that you will have to make. Again, at what point of time do we select the scheme, right? So we have this option to select the scheme on year basis. So at the beginning of the year, typically you can intimate to your employer that this is the scheme that you would like to opt for. And, you can't keep changing this every now and then just because, the TDS amounts vary, or, you can't do that. However, one change can be allowed at the time of filing of your return. And at that point of time, if you decide that no, the other regime is better for you, you can change it at that point of time, but not frequently during the year. So what are the tax deductions that we're going to talk about, right? So don't worry, we're going to talk about it now. And I think this is something which will be of interest to everyone. So typically you have your public provident fund, your employers, contribution towards provident fund, your LIC premiums, equity linked saving schemes, which are investments, in specific mutual funds, which are for this purpose. Any kind of principal amount, which you are paying towards a home loan, stamp duty, registration charges for purchase of property, your investments towards NSE, any kind of ULIP, then your Sukanya Samriddhi scheme. So these are deductions which you can kind of claim, and the maximum amount allowed under all this is 1,50,000, which you can claim. So there are some more tax deductions. Hold on. So there are, with regard to your pension schemes, there are certain deductions which are allowed under few sections. NPS is again an additional 50,000 which you can get as a deduction. So beyond the 1,50,000 which we spoke about, there's an additional 50,000 which you can claim for the employee's contribution towards another deduction which you can claim. Further, there is a deduction towards, again, commonly used ATD, which is insurance premium, which is for self as well as for senior citizens, which you can pay up to. For senior citizens, the limit is 50,000, and for an individual, otherwise it is 25,000. And ATDD, again, it talks about if there is any kind of a disability. So the individual per se can claim a deduction based on the severeness of the disability. The limits are fixed there. So I'm going to talk about common deductions which generally people use. Again, interest on loan taken for higher education. So there's no upper limit here. Deductions with respect to, again, home loans, for interest you can take. There are certain conditions here with section 80 EE and EEA, where, specifically we're talking about conditions in respect of the amount of the loan, or and as well as the value of the house. So it's mainly for affordable housing. As you can see, EEA up to 1.5 lakhs you can get. There are also, deductions which you can get for any kind of loan that you've taken for an electric vehicle. So up to 1.5 lakhs you can take deduction of for the interest that you're paying towards that. ETG, again, a lot of people do some donations towards charitable institutions. So not every institution would be kind of eligible. There are certain specified institutions where the donation is limited to the extent of either 50% or 100%. So those are specified, they're notified places where you get that. ATGG, again, is an interesting section which could be which could be use to many people, where if HRA is not given as a part of their salary structure. So the deduction limit is, of course, 5,000 per month, which can be claimed, or 25% of income, which is less. So typically, at least 60,000 in a year can be claimed towards rent. But mind you, this has to be when a person doesn't get any kind of HRA benefits. Again, ATTTA is an important section here where we all get interest on our savings bank accounts. So up to 10,000 is something which we can claim, which we sometimes forget to. So I think this is up to 10,000. You can, all the interest which keeps coming up every 6 months or quarterly in your bank account can be claimed. ATU again is a deduction available for a disabled individual. So here it's for the individual per se who's disabled, and the deductions is based, of course, on the extent of the disability. Again, here, which scheme really makes sense? So there's no one answer really for this, because it would depend on each individual, their kind of salary structure, their kind of investments that they are making into various instruments, and the quantum of it as well, right? So it depends purely on that. There's no right or wrong here. It again depends on how your structure is and the investments that you have made. So this is a simple example. I'll just take you through this quickly, wherein, let's say, a person who's drawing an 8 lakh salary under the old regime gets certain deductions on standard deduction, profession tax, HRA. Whereas in case of the new regime, if you see, the deductions are nil. So pretty much his taxable salary is quite high. And the net taxable income, as you can see, obviously in the old regime is lower, and as a result, the tax is also lower. So despite the new regime here having a lower tax slab for this particular bracket of 8 lakhs, but it makes more sense for this person to go with the old regime because he's got certain investments which he has made under ATC, ATD, that is your insurance, as well as your HRA, etc. So it makes more sense for him to go with the old regime. Similarly, in case now we take the same person who, let's say, doesn't have an HRA, but he has some sort of ATC investments which he has made. I mean, if you can see that, his taxable income here is much lower in case, of course, of the old regime. In case of the new regime, it is still 8 lakhs. But the tax on above, I mean, here the new tax regime becomes more beneficial because he's not opting for, he doesn't have HRA yet. So the lower tax slab of 15% becomes more beneficial for him. Again, same example with the full HRA, with the full ATC deduction of 1,50,000. I mean, with the old regime, he has completely no tax, right? But with the new regime, he has a taxable amount. So there's a similar example with a 12 lakh salary, which, I mean, people can go through once it's sent to everybody. The point here is it becomes important for everyone to do this basic calculation to see basically what kind of investments they'll be able to make and what their structure is, and then determine which scheme is beneficial. Now, common tax saving options. Basically, yeah, let's start saving our money. What are people doing, right? What are they investing in? What makes real sense for them? So I would really give a big thumbs up to an equity linked savings scheme, which is a mutual fund, and I think that's a great way to also create wealth. Because you shouldn't really look at it as just a tax saving option, right? So it's something which is going to also beat inflation. So returns typically in the range of 12 to 15, and I've been conservative here. You may get something higher as well. The only thing is there is a lock-in period of 3 years over here, after which you can exit out of this if need be, or continue and stay invested if the scheme is performing well. In case of a public provident fund, this is again an age-old investment tool which we've been actually using and to save taxes. This is something which comes as which has an EEE status. We call it exempt. So right from the investment that you're making to the interest that you're earning to the withdrawals that you get, everything is exempt from tax, right? Nothing is taxed. So in those terms, it's a wonderful mechanism. Returns in the range of 7 to 8, and this keeps getting revised. However, the lock-in period is long, is 15 years, but there are withdrawal options, partial withdrawal options, which you can do after 6 years, as well as loans which can be taken against this. NSE, again, many people use this. 7 to 8% is a kind of returns, lock-in period again for 5 years. National pension scheme, that is the returns that you get are again in the range of 12 to 14%. Again, a good way to save taxes, which basically looks at investing in our equity markets. So again, inflation beating instruments. The only thing is you need to stay invested till retirement. Sukanya Samriddhi scheme, many people who have daughters and want to kind of save towards their needs in the future can also look at this as a good tax saving option. Again, this has a EEE status here, the returns of around 7.6%. Withdrawals, the account matures after completion, of course, of 21 years, but withdrawals can be made for, let's say, educational purposes or any other needs which are required for the girl child. Other popular tax saving options are your home loans. So principal amounts which are, can be included under the 1,50,000 overall limit. One important thing is children's tuition fees. People forget. Today, many people spend a large amount of money towards tuition fees, for their children. So here it would be the pure tuition fees. Nothing. It will not include something which you're paid for, let's say books or uniforms. It will be the pure tuition fees which you can claim as a deduction. So this is something which you normally would spend, and there's no specific investment per se which is required, so gets automatically covered here. LIC premium, again a popular option with people, wherein they take a life insurance and pay a premium. But I think I would urge people to really look at an ELSS, especially the young generation, to build their wealth and also get good tax benefits out of it. So what are common mistakes that people make, right? So what happens is once you file your returns, you need to e-verify your tax return, and this step should not be forgotten. It is done typically within 120 days from the date of filing return. It's quite simple, and whether you're doing it through the income tax portal or any other portal, it kind of directs you to do that. In case of a change in employment during the year, what happens is many people don't disclose the income that they have received from the previous employers. So that again is not right, and the income tax return should include both the incomes per se from both the employers. People don't disclose their other sources of income. So like I mentioned, the interest, let's say, on any kind of deposits that you have, or dividends that you've received from your shares, or any kind of gains, let's say, that you've made on selling of your shares or securities. So people don't disclose that, but you should. People don't forget, people forget to claim the deductions under Section 80TA, which I was talking about on the interest that you're earning on these savings accounts. So you should remember to claim this deduction. Filing returns if tax is deducted. So again, here, I think the misnomer is that if people think that, if tax is deducted, I no longer need to file my returns. No, that's not the case. You will still have to file your returns to show whatever income has been generated, what is the tax that has been deducted, if there is an additional tax liability which comes up, or it may so be the case that an excess amount has been deducted, and then you can claim a refund. So again, on certain incomes like deposits, etc., there is TDS which is deducted already. So we should remember to claim this. There is a Form 26AS which can be easily downloaded, and wherein it clearly states how much income you have received and what is the tax already been deducted on this. So you can claim that TDS or the tax which has already been deducted on this. I think this is very important. People should remember this. And in case they have other sources of income, I think you should not forget that there are certain periods of time which are slots where you can pay your advance tax. So if let's say the other sources of income is large, what happens typically is this doesn't get captured when you're providing all your details to your employer, because that's pretty much your salary income. So there will be some tax component on that as well. So you can pay a small amount of advance tax. Of course, there's no compulsion to pay this. What happens is, if you don't, there is a small interest element which comes in, because you'll be paying this self-assessment tax later when you're filing the return. So there's a small interest and things like that which come in. But if you want to be like, super planned and you have the cash flows, you can go ahead and pay this advance tax. So one problem which we always face, I mean, with people, is they don't understand what is previous year and what is assessment year. So these are again, previous year typically is not as per the exact word. It actually pertains to the current financial year for which you are filing your returns. So let's say for 21-22, you will be filing your returns somewhere around July. The 21-22 will be the previous year, and the assessment year will be 22-23. So it is the next year which actually is the assessment year. So many a times, quoting the wrong assessment year also is a problem. So do's and don'ts of tax planning, I think let's all start early and think long term, and let's not procrastinate on this, because again, let's not think that tax planning is an independent activity, because it is a part of one of your, it can be an integral part of one of your goals in terms of creation of wealth. So I think let's not look at it as an independent activity, and let's think long term there. Once we start prioritizing our health and life, we start taking start taking insurance, start paying the premiums, we also get benefits there, right? Let's have a fair understanding on options available, because I hope after this session as well, people have a fair understanding on that. So it's not that you are dependent on somebody. Yes, there may be people helping you with filing your returns, but you also do know about certain options that you have. Again, I think we've discussed at length why it becomes very important to choose the right tax regime for you, since that option is available now with us. Planning cash flows for investments. I mean, many a times you find people Feb, March, they end up having no salary income practically, because a lot of it has been deducted on account of TDS, for the simple reason they've not done the investments, and it all happens during the last minute. So let's not do that. Let's plan it out a little, and this could be over a period of 8 or 9 months. You could just stagger those investments. Stay organized. I think keep records, receipts becomes important later on, in case there's any kind of scrutiny or a notice. We can always go back to retrieve all those documents, and because you may forget, right? So it's better to stay organized and keep records of all our filings, etc., which is done. And please don't wait till the last day. So I think we are on the brink of the next year. So let's look at planning well and planning with all the options in our. Yeah. So I think it's not. I have to brace myself now.
I'll wait for everyone. Like, I'm not sure whether everybody is awake or not. So I think
Okay.
just who will want this presentation in their inbox? If you want the presentation, please just post yes or anything on the chat, and my colleague would be noting down your names and we'll send it. Okay, so only 10 people want it. 25. 35. Okay. I'm assuming out of the 112 people we have, 40, 50 are sleeping or something of that sort. Awesome.
Please wake up.
Got it. So I think my colleague would be noting down the names of everyone, and we'll be sending out this presentation either by today, end of the day, or tomorrow, end of the day, for sure. Before we move to the next part of like actual Q&A, we would want like an NPS survey from all of you, because it would help us improve our session quality in general. So I'm just launching a poll. If you can like just click on the rating that you want to give us for the session, it would help us to improve our next sessions as well. we continue to do these kind of sessions in a regular manner, not only on financial tax side of things, but investments, mental health, physical wellness, yoga, stand-up comedy, and music, and all those kind of things as well. Meanwhile, you all can put the questions on the chat. We would love questions. Aparna is with us for another 25 minutes. She'll be happy to answer most of the questions.
So I think while you are putting your questions down on chat, I think what, certain lot of interesting questions which came up even during the last session that we had from people, right? So especially they were centered around HRA and the interest on home loans, etc. So I mean, I would just like to take that it could solve some of the queries that people have in their mind. So let's say a person has a rented accommodation in Bangalore and has another property for which he's taken a loan in another place, but for work reasons has moved to Bangalore. So in such a situation, definitely he can claim both. He can claim his HRA as well as the interest on the home loan. So he will be eligible. He or she will be eligible to get both these deductions. I think this happens, right? People move to different places for work purposes and then they end up paying rent. So I think it's good to know this. Having said that, if a person, let's say in the same place where they're working and maybe they have purchased a property there for which a home loan has been taken, again there is a chance that you can claim both. However, the distance typically between the workplace and the place's property is should be typically at least around 35 kilometers, because this just goes to prove that you're not because of distance able to stay in the place where you have purchased a property, and that's the reason where you're taken a place on rent. So these were some common questions which came up last time under when we had this similar session. So just thought I'll bring that out. It kind of just helps.
So I think Aparna, Nitin Unyal had an interesting question. Can you suggest? I think we can stop the presentation so that your reactions are much more visible. So Nitin had a question. Can you suggest best regimes to select from each salary bracket?
So again, it's not one answer for this, because it depends on what kind of salary structure you have. Like I said, suppose and what kind of investments that you have done as well. So once we are clear on that, only then you can kind of decide on which is the best regime for that particular slab. Like you saw for 8 lakhs, we had this 3 examples, right? But depending on the investments and the allowances and the HRA deductions claim, the tax positions varied. So it's not a straightforward thing.
Got it. So I think Saurav has asked, can we get this PPT? So I think for sure we'll get the PPT after the session. Navneet and Viswaran is asking, if you have the tax calculator, can you share that? Like, do we have some kind of tax calculator?
So that's commonly available. Actually, you just Google it. There are lots of tax calculators which are available. I mean, you can easily get that. That's not a problem.
Got it. Shilpa Shri is asking, are we supposed to pay taxes on cryptocurrency while filing our returns for assessment year 2022 and 23?
So again, that's pretty much a new area, right? The good thing is that it has come under the tax ambit. So the whole thing is getting, it has got legitimized in a way. So yes, you will have to look at, paying that 30% tax. But I think we're still in that learning phase, because, it is a nascent thing. So time will tell, and I think things will evolve eventually.
Got it. I think Vijay is asking, can you explain the difference between 80D and 80DD covering for self and parents?
Yeah, so 80D typically is for the insurance, that insurance premium that you are paying for yourself and whatever health insurance that you have taken. Whereas 80D actually pertains to this is pertaining to a medical treatment of any kind of a person with a disability. So there is a difference. It is one is talking for insurance premium which you will be taking, and one is the expenditure that is involved in terms of any kind of treatment for disability, right? So for a person with disability.
I think Manikanta is asking, for dependent persons, can we claim for tuition fees?
For dependent?
Person.
Yeah. So typically for your children, yes, tuition fees you can claim under ATC.
Got it. Omkar is asking, assuming full ATC investments and no other deductions, what is the income after tax which old tax regime saves more tax?
So, meaning if he takes the entire ATC reduction, could you just repeat that?
Yeah, I'll just repeat the question. Assuming full ATC investments and in bracket no other deductions, what is the income after which old tax regime saves more tax?
Old tax regime says. So that again, we'll have to compute that and see. It depends, right, on what is your salary structure, and see, because as you saw in the presentation also, the slabs vary. 7 slabs here as per the new regime, whereas this 4 slabs as per the old regime. So we'll have to look at that based on your salary structure.
Got it. I think the second question from Omkar itself, if the salary hike happens in the middle of the financial year, how would I estimate advance tax? Will I have to pay interest under section 234 if I don't know my income for the year?
So advanced tax, again, you would definitely know from what point you're getting that hike, right? So you'll have to compute, like, let's say it's in the middle of the year, so 6 months you have received your erstwhile salary, and for the remaining 6 months is the revised salary after the hike. So considering both of that, you will have to compute and see what exactly will be your taxable income. Again, advanced tax doesn't become that critical here, Omkar, if you don't have other sources of income, because typically this gets your salary income, the TDS will be deducted by the employer, because you will have to give declarations to them saying that, I'm going to be investing in X, Y, Z, and accordingly that TDS is computed. So that comes typically into play. Advanced tax comes into play when you have other sources of income.
I think Harisharan is asking, hey, I bought a home in March 2022. Can I claim for the amount I've paid to builder in cash?
In cash?
Yeah.
No. And basically it's only after the construction is complete is when you can actually start claiming.
I think this is an interesting question from Ishwar. Why can't we take house loan benefit until the possession period?
No, we can't claim. That's a typical question, I think, asked by many people. Only once the possession is complete, you can claim and the deduction over a period of 5 years.
Got it. I think Vijay is asking, what all is covered for parents under 80D? Is medical bills can be claimed for 50,000? If yes, then how do we submit the bills to income tax department?
So important thing is, I think you need to keep those records. So there's no this thing where it needs to be filed. When you're claiming this deduction, and let's say if a notice or a scrutiny comes, you have the supporting documentation for it.
Got it. Please share more use cases related to HRA.
Okay, so yeah, a couple of them I just thought I'll bring that out beforehand. If there is some specific question in mind, maybe we could take that.
Okay, so we can cover that in the end, is it?
Yeah, I mean, if there is a specific question there.
No, I think we have a repository of around 120 questions or so from the last session. So I think Akash is asking for a fresher. Can I get an idea about filing the tax? And for fresher, what should be the best investment to save tax?
So for a fresher, I would give a big thumbs up to ELSS, which is a mutual fund, and which has a lock-in period of 3 years. But again, inflation beating instrument, so gives you good returns as well as gives you a tax benefit.
Got it. I think I'll just take a pause here. I think my colleague pinged me. So I think a lot of people are dropping as well. So we would want to conduct some kind of similar session next month as well. So if you can suggest us what session would you like? So would it be mental health, physical health, financial health, chill sessions, or all of the above as well? It would help us to curate next month's session at the same time. Yeah, I think we'll just wait for a minute or so that we can start planning the next month's session. 40% people want a financial wellness session. Nice. Awesome. So I'll continue with the questions meanwhile. So Omkar asked, is employer contribution to PF fully tax-free? Is there any kind of limit around that?
Yeah, so that comes within the limit of ATC of 150,000.
Got it. Then there's what is advisable to invest a wholesome amount of 1.5 lakh in one of the schemes or divide amount and invest in multiple schemes under 80C.
Again, that depends on your risk appetite as well. So, like I said, I mean, there could be cases where if I'm very young and I'm looking at wealth creation, I could invest the entire lakh and 50 in an ELSS, because after 3 years, again, if this is growing well, I retain it. But if my risk appetite is low, maybe I could look at a PPF, because this could be treated as a long-term retirement benefit. Besides your PF that is getting deducted.
Got it. Omkar has a question. Do I have to declare gift income from close relatives, family in ITR? If yes, is it taxed?
So I think gift from relatives is exempt. But we'll have
Okay.
to check on that. I mean, how are they related, etc. We'll have to look at the details.
Got it. Akhil is asking, how about education loans for a remote master course, like some kind of MOOC course? He's curious, like, would there be some kind of rebate under taxation, or how would it go about it?
So for education loans, I think there are, I'll have to check on that, if there are certain notified courses there. But any kind of loan that you're taking and the interest that you pay on that, you can claim. But I'll have to check on that as to if there are the certain, notified courses, etc., or institutions.
Okay. So look, Lokesh is asking, I will fall under 30% slab rate. I will declare HRA, declared 1.5 lakh under 80C. What is the best for me to choose between old or the new?
Yeah. So I think in that case, maybe the old regime will make more sense for him if he falls in the 30% bracket, and he will be claiming his entire HRA, as well as he'll be claiming entirely the 1,50,000 deduction. Plus, if he has any kind of insurance premium, etc., which he's paying, that's more and above. So maybe the old regime will be beneficial there for him.
Got it. I think HS is asking, what in case of change in location during the financial year? So for example, I was in Bangalore, then I moved to Delhi or something. How do I claim about the HRA, and do we need to present house rental proof for both the locations?
Yes, in the sense, proof in the sense there are certain parameters based on which the HRA deduction is claimed. So again, in one of the points, the location does matter, because it should be any of the 4 metro cities. There is a specified percentage of 50%, and Bangalore is not considered as a part of that metro. So then it is 40%. So again, the location matters for claiming the HRA.
Vijay is asking, how does paying rent to a parents be recorded as HRA?
So again, here many people do this, wherein they, let's say, pay rent to their mother or their father, where they've kind of want to show that as a rent paid for HRA. But I think what you should also remember is that this rental income then gets taxed in the hands of your parents.
Yeah.
So even though you claim that deduction, but it gets taxed in their hands.
Saurabh is asking, can I claim tax benefits for my wife's abroad education loan and expenses?
So I think dependents are covered.
Dependents are covered. Got it. I think Lokesh asked, I switched to a new company in middle of the year, but there was a lot of deductions happened in April 2021 and May 2021, also in Feb 2022 and March 2022. Half of the salary got deducted, even though I paid taxes every month from April to March. Why there is an extra deduction? I think, Lokesh, this is a specific question.
Yeah.
Specific to
We'll
HRA.
have to examine that. Yeah.
Pranay is asking, can I claim money which I donated to government school?
Again, it depends whether that is notified or not, because typically you will get a receipt which clearly says that it qualifies under Section 80G of the Income Tax Act. So you need to have that to go ahead and claim this deduction.
Okay. Hey, I used my brother home, even I paid rent as well. Can I claim that amount? So Hari is asking, hey, I used my brother's home, even I paid rent as well. Can I claim this amount?
So he's paying rent to whom?
Hari, are you there? Like, you can just post it on the chat. Okay. So moving next.
Yeah.
To my brother. So Hari is saying, to my brother, if I paid the rent,
Okay.
Can I claim the HRA on that?
You can, but his brother will be taxed. It's the same thing, right? If you're paying it to your parents or whatever.
Got it. Mahua is asking, are siblings considered as dependents?
Siblings for which particular section?
Mahua, if you are there, you can like put a follow-on question.
Yeah.
Sunil is asking, sorry, so Mahua is saying
that is
tuition
tuition fees typically it is for children.
Yeah. Okay. So Sunil is asking, do I have to declare income received from my ancestral property?
So any kind of income in terms of rental income which he's getting, yes, you will have to declare it. It will be part of your house property income.
Got it. Suni is asking, if I deposit money in my mother's or father's account to claim senior citizen benefits, will my parents have to pay tax on that money, or will my parents only have to pay tax on the interest?
So let's say you have made a transfer to them for some reason, and if they have invested that money, because that's how it will be, right? To claim, many people do this so that they get a higher rate of interest, because senior citizens get a higher rate, so they will have to show that under their taxable income.
Got it. Is paying rent on behalf of our parents exempted?
Behalf of parents, no, the rent has to be paid by you for your purpose.
No, I think it's for the parents. So let's say parents are living in different city and they are paying rent. So you are paying the rent for that property.
No.
Got it. Kavish is asking for HRA claim. Is owner's PAN card enough, or do we have to submit anything else as well?
Yeah. So if the rent is more than 1 lakh, then you need to put the PAN number. They need to put the PAN number. That's enough.
Got it. So folks, if you have any other questions, feel free to drop in the chat. And I think one of my colleagues might have also posted the future sessions link, so you can register from there as well. So I think somebody asked how HR is worked out between married couples. Can both the partners claim it through one, though one is paying to the owner?
So that's pretty ambiguous, right? You're kind of you inviting trouble, because there's no commercial relationship per se which exists when you're staying together, right? So both of you claiming that, again, you need to go and prove that both of you are paying the rent separately also. So
Got it.
you get a little ambiguous and may land into some sort of trouble.
Got it. I think.
However, in case of just to add there, let's say if it is a joint property, and there is a home loan which is taken, both of them can claim it. If let's say but it should be a joint property, so both of them can get a deduction for the home loan benefits basically.
Got it. So I think we have this many questions only. Until somebody has any questions, feel free to drop in. Otherwise, we can close the session. Aisha, is there any other questions that we have already? Okay, so we have one more question. If I have freelance income over my regular salary, do I need to declare that to my full-time employer to calculate the tax?
It's beneficial if you declare this as, but it will not be part of your salary income. Obviously, it's a part of other sources that, or it could be business or profession that you are getting that income. So if he computes the TDS and gives you, well and good. Otherwise, you need to pay that TDS. You need to deduct that and pay it basically.
I think Aparna, this is related to that married couples paying rent to the owner wala question follow on. If the house rental agreement has the name of both the partners, then we can claim for both of them, right?
So the husband and the wife both are yeah, I mean, both of you can then split and pay it, but also the rent is being paid separately by both the spouses, right? Then in that case,
yeah, if not separately, then you would not be able to account for it in the bank.
Yeah, otherwise you will not be able to claim it.
Got it. All right. Awesome. So I think rent agreement is compulsory for HRA.
Yes, I mean, a rent agreement is always good to have. And in certain states, it again depends. It needs to be also registered. If it is more, in Bangalore per se, like if it is less than 11 months, I mean, leave-in license, typically its registration is not required. but good to have a rent agreement.
Got it. I think Aparna, we had this many questions only, so we can close the session. Awesome. Thanks a lot.
Thank you so much, everyone. I hope it was helpful.
I think there are 2 more questions. So what about how hostels and PG rents, can we claim an HRA on that?
Yeah, any kind of rent, right, which you're paying. If you're getting an HRA, you can claim.
So I think this is a follow-on question. And in what in cases you relocate in the same city, but you have only rent agreement to one of the properties only?
Didn't get the question, Devansh.
Yeah. HS, can you explain the question? You can unmute yourself. I'll just change the settings.
Hi. Thanks. Hope
Can
I'm
you speak a
audible.
bit louder? We can't hear you.
Yeah. Hope I'm audible. So yeah. So I really want to ask. So suppose we are living in a city, but I had to relocate within the same city, but I don't have the rental agreement from one of my earlier rental property. Suppose I live in there from March to say October, and then October onwards, I relocated to some another area. And I just have a rental agreement to that. Suppose from October onwards, where I'm living, I have rental agreement from that owner. So in this case, would I be claiming HRA for that particular period, let's say October to March, next March? And
so I think you can claim. See, there's nowhere where you need to kind of file the rental agreement or anything like that. But it's always, like I said, it's good to have that on record, or rent receipts and things like that, right? Which you have in case, let's say, you don't have a rent agreement, but for the previous period, if you can get certain rent receipts from that party to whoever it is paid, then you can claim it for the full year.
And what about the like sort of proof? So definitely I would have the bank statements.
Correct. So your the outflow is there, which is reflected in your bank, that every month you have paid out that rent.
All right. Thanks a lot.
Yeah. Thank you so much, everyone.
Thanks a lot, folks. Bye. Take care. Cheers.
Thank you. Bye.